Hey everybody, Jared Duckett with Duckett Ladd here with Sarah Skidmore, director of our Dental Momentum department. Sarah, how are you?
Doing good. How are you?
I'm doing good. We're here to talk. Sure, in the last video we did the ERC VDP. We're having a lot of questions about the Employee Retention Tax Credit Voluntary Disclosure Program. It's all these different acronyms, right? ERC VDP. Today we're talking about all things CTA. We're going to talk about FinCEN. I'm
More
telling you,
acronyms.
these people just make stuff up, don't they? But let's do it. What we want to talk about is getting a ton of questions. Sarah, you're seeing a lot of these questions too from clients, right? And this is
Yep.
timely stuff for sure. But what is CTA, FinCEN, these reporting requirements? Just give a very high level, like, what do we got to do now with
Sure.
reporting?
So to break it down first, the acronym CTA stands for Corporate Transparency Act. So the act came into place as an anti-money laundering type of mandate that was coming out. And CTA is authorizing FinCEN, which is the Financial Crimes Enforcement Network, to carry on the reporting and to take care of the reporting for those things. So there is new reporting requirements for small business. That's essentially a high level overview of what this act is doing.
So more stuff small businesses have to report to send to some sort of government regulatory agency, right?
Exactly.
Okay, so we say small business here. Who does this pertain to? You like everybody's got small businesses, LLCs, all this fun stuff, right? Like
Sure.
what entities are subject to this specific, right, reporting requirement under CTA?
Sure. So it includes corporations, limited liability companies, and other companies that are filed with the Secretary of State, where it's the opposite of a lot of acts that go into place that are geared towards large corporations or businesses. And it really is small business focused. And it's essentially like you have to file it unless you meet one of the exceptions. There are a lot of exceptions. The majority of them relate to entities that already file with the SEC or are already providing high levels of government information.
Yeah.
And one of the most notable exceptions is for the large operating company. So what is a large operating company? You have to meet all three of these requirements to be considered a large operating company. You have to employ at least 20 full-time people. You have to have a physical office presence in the United States, and you have to have gross revenues of over 5 million.
Okay.
So the majority of people working with their local CPA firms and own a small business are going to fall under this reporting requirement.
Yeah. So what you just went over, that large operating company, that's the big, call it notable exception, right?
Yeah.
So let's just use it this way, right? Like everybody's opted in automatically, right? You got to report
Yep.
unless you meet one of these exceptions, which there's
Yeah.
a ton of them probably. Well, maybe not a
Yeah.
ton.
Over 20.
Over 20? Okay. But this big notable exception is this large operating company. And if you hit all three of those, would you say 20 full-time, 5 million
5
of
million.
revenue?
Mhm.
Okay. And an
And then
operating presence.
an operating presence in a physical office in the US.
Yeah. So think about most of our dental practices, right? I mean, some might be in that notable one. They might get in there, but for the
Right.
majority, you think the average dental practice, right? $1 million in collections, give or take.
Yep. They're going to be
Yeah.
subject to this reporting. Correct.
Yeah. Okay. So that's who has to file, right? And
Yep.
so when you're filing, right, so number one, you got to file small reports, fun stuff, right?
Yep.
Number two, make sure, do you qualify, if you will, or do you have to, let's say, do you
Yeah.
have to report? What are we reporting here? We're filling out
Yeah.
paperwork. What are they reporting on?
So they're really reporting on, there are a couple of different things, and it falls into the timeline of when your business went, like when it was formed.
Right.
So mainly you're filing information on a beneficial owner. So really it's not the individual filing, it's like the company filing the information on their beneficial owners.
Yep.
Is how all of that works. And
And
a
that's the
beneficial owner,
BOI. There's another
correct.
acronym, right? BOI.
BOIR, you'll see it's beneficial ownership information, and then the
Okay.
BOIR is beneficial ownership information reporting. Like you're
Gotcha.
going to see those acronyms a lot.
Okay.
And so that is the information you're reporting about yourself. It's your name, your personal address, an identifying number on you, which I've seen a lot of things where it is like a driver's license number or a passport number, and things of that sort. So who is a beneficial owner of a
Exactly.
company? Yeah. So a beneficial owner would be someone who has substantial control over the organization or has a 25% or more ownership in that organization.
Yeah.
So substantial control, it's a word that we hear like in the auditing world and things of that sort. So it might be something that you have heard or are familiar with that language, but what does that actually mean? Essentially, if you have substantial control, it means that you can make decisions on behalf of the company. That's going to be like your senior level executives, members, anyone who can make a decision on behalf of the company would be considered having substantial control and therefore be required to file a BOI report with the company, even if they don't own 25% or more of the company.
Yeah. So that beneficial owner, I'll go back and say it again, is there's an or there, right? Substantial. Well, let's do it. Let's say it this way. If you have 25% ownership interest or you have substantial control.
Correct.
And we won't get into the weeds. We're going to try to stay high level on this because we can geek out for an hour. That's really geeking out. But I mean, what the definition of substantial control is, and we're gonna say this at the end, but a lot of this, hey, you're gonna need to get with your legal counsel on to say like, hey, what does this mean? Is this substantial control and all this fun stuff?
Right.
But that's the key thing, right? Reporting who the beneficial owners of this entity are, basically.
Yeah.
Okay. So here's the question we're all getting, right?
Yeah.
Another due date. And not another acronym comes with another due date. When the heck are these things due by? That fun stuff.
Yeah. So I think that it's important to also note that this reporting is not an annual filing. It is a one-time report that you're doing, and in relation to the due dates. If your corporation, LLC, small business was formed prior to January 1st of 2024, you have until January 1st of 2025 to file your initial BOI report.
Okay.
If you file and form an organization in 2024, now that we're here, you have 90 days to file your initial BOI report.
Okay.
So the 90 days,
which was like previously 30 days, but they changed that, right?
Correct.
Okay.
Previously it was 30 days and now it has changed to 90 because it is new. We don't want to penalize people right off the bat with something that's new. But I believe I've seen that like starting in 2025, it'll go to that 30 day. Yeah. But for if you formed in 2024, you'll have 90 days to file your initial BOI report. After an initial filing, if any of the information that you have originally filed changes, you have 30 days to file a change report. So if there's a change in ownership, someone has substantial control, someone leaves the organization, if there's any sort of change that's been made filing, you have 30 days to make a change report.
So this is a one-time filing, not an annual thing. We got to do a review like a tax return. This is an annual filing.
No.
No, I'm sorry.
So initial.
It's
a one-time.
an annual filing. It's a one-time. See, I can't even get it straight, guys. It's a one-time filing, but will need to be updated if there's a change in the beneficial owners.
That is correct.
Gotcha. And that's the key. We're getting a lot of people saying, hey, I've got an LLC or an eligible entity, if you will, that's been around for a while, right? Prior to January 1st of 2024, I don't have to file. That's not the case.
That's not the case.
You have to file that report by the end of the year.
Yep. You have a year to do it. So it's not something you have to rush and get done. I know that everyone's, rushing to start getting taxes and all of that stuff. That's just this time of year. So it's something that you can wait on and do later this summer and into the fall. That's not an issue, but you'll have to have it filed by 1/1 of 2025.
Yeah, that's so confusing because if I go file an entity today, like register it and get it filed, I have 90 days to file.
Correct.
Okay.
Yeah.
Due dates. I hope you guys understand all this. You can see I don't all the way. That's why Sarah's here, but it's just more reports with more due dates. But I think we're on the same page. So what do we know who has to file. We know what it is. We know who has to file. We know what they have to say on it to a degree, high level. We know when it's due by. What should our clients be doing now? What should you guys listen out there be doing now about like getting prepared for this, if you will.
Sure. So, you know, we as CPAs and professionals are doing a lot of research and trying to figure out a lot of information about this. Our recommendation is that you reach out to an attorney, your legal counsel.
Yeah.
This is not something that is part of the tax code. So it's not something that currently is on CPAs at the moment. It's kind of being geared more towards an attorney legal type of reporting.
Mhm.
So our recommendation is that you reach out to an attorney with the caveat that you don't have to have an attorney to file it for
Do it
you.
on
You
your own,
can
right?
file it
Yeah.
yourself.
Yeah.
You can file it on your own, no problem. But our recommendation is if you have any, we're happy to answer any questions from the knowledge that we have, but where it goes to like legal type questions, we would obviously refer you to reach out to an attorney.
Yeah, especially when you're getting into, you know, substantial control and what is it a BOI? Is it not? Is it beneficial owner? Is it not? And all that fun stuff.
Is it
You know,
an
get with
eligible entity?
there you go.
Yeah.
Yeah. So get with your legal, get with your counsel on that, you know, exactly what's required. We're here just educating, like, again, we try to educate and get out in front of things. And we usually educate based on questions coming in, right? We try to stay
Sure.
proactive here, but it's like, hey, we're getting questions. This is what you need to be doing. But do it just like Sarah kind of we just went through, like get with your attorney, see how many entities you got, right?
Yeah.
See when they were formed, see if you have to, if you hit the eligibility and all that, and then get with legal counsel to determine, know exactly what needs to be done. But
Yeah.
just another, and then they throw out penalties, right? You always love it, right? If you don't get it done, there's penalties, of course. There's
Yeah.
penalties with
And the
everything.
penalties, we should say, are very substantial.
Yeah.
They're $500 a day with no cap. So that is
Yeah, I'm just looking over
hefty.
here at some
That
of the
can
stuff
be,
it says
yeah,
too.
that can be really hefty. And those are the civil penalties. There is also like a criminal penalty that could be imprisonment of up to 2 years and up to a $10,000 fine. Like these are not
Sarah,
little
that's heavy
fines.
on a Friday. That is heavy on a
That's
Friday.
very
right?
heavy. But I mean, it's good for people to know because it's important for you to make
Yeah.
sure you're being proactive about it, seeing what entities that you have that are going to be effective and making sure you get your reporting done timely so that you don't even have to worry about those things.
Yeah, 100%. Well, Sarah, I appreciate it. You guys out there definitely, if you have questions, let us know, especially if your clients, you know, ask us questions. You know, we're here to help. But we will say, hey, it's not in the tax code. Get with your counsel. You hear that a lot from, hey, get with legal, you know, to figure this out. But we're just here to make sure you guys are taken care of, get it filed, and here to be a resource for you. So, Sarah, appreciate your wisdom on this. If there's any updates, you know, we'll be out in front of it, try to let you guys know. But you guys out there, appreciate your time. We'll talk to you guys soon. Take care.
Thank you.